Welcome to Cat Eye US Stock. We watch markets with calm focus and sharp instincts. It's Tuesday, April 14th, 2026, and the tone was risk-on, decisive even, but very top-heavy. Quick read here. Big tech and the heavyweight communication services names dragged the whole market back toward record highs. Energy got hit as crude eased and that war premium cooled off. So this wasn't an everything up kind of day. It was the generals taking the hill while a lot of the troops stayed back. On the S&P 500 heat map, it looked mixed but tilted green, because the biggest tiles did the heavy lifting. Oversized, bright green megacap tech and comm services blocks grabbed your eye right away. Meanwhile, the red was concentrated and intense in energy. Financials and staples? Pretty choppy. And that created a masking effect. The index looked strong, but participation was way more uneven than the headline would suggest. That heat map picture lined up with the money flows. Capital rotated out of the war and inflation hedge, energy, and into long-duration growth, mega-cap tech, communication services, and the AI infrastructure complex. Consumer discretionary joined in too. The key character point here, it felt very index positive, but pretty narrow. The biggest weights shoved the benchmarks back toward the highs, while parts of financials just didn't confirm with the same enthusiasm. The central tension today was geopolitics and inflation risk, mostly expressed through oil versus the market's urge to re-rate AI and mega-cap earnings power, and traders mostly chose the latter. The Nasdaq leading wasn't a throwaway detail. It signaled the market was paying up for high beta narrative-heavy exposure again, but there was a clear caution flag when a single big bank prints deep red while the indices look great. It's a reminder the mask can slip fast if earnings or credit stories disappoint. One piece of market chatter that popped today reports that United's CEO floated a potential merger idea with American Airlines. This is chatter, not confirmed fact, but it did add a speculative bid to parts of the airline complex, and it fit right into today's broader risk-on mood. Micron, MU, was one of the loudest tells on the day, jumping about 9%. The setup: strong upside in memory and semis tied to AI demand expectations, plus analyst estimate and target hikes into the name. Why it mattered. MU traded like a high-beta AI supply chain proxy, and the size of that move said traders were willing to pay up again for cyclical AI infrastructure winners. Nvidia gained just under 4% as the AI and semiconductor momentum trade kept rolling. This name is still the market's main AI risk appetite proxy. When Nvidia's green on a day like this, it basically tells you the rally is being led by growth leadership, not just a defensive grind higher. Meta rallied more than 4%, the cited catalyst. An ad market narrative boost after an e-marketer projection that Meta could overtake Google as the top digital ad seller by net revenue this year. In today's tape, Meta mattered because it helped drive communication services leadership, and it acted like a sentiment bellwether for those monetization stories. Wells Fargo was the standout negative, down almost 6%. The driver: a revenue miss and margin pressure narrative that outweighed the positives. And this is the kind of divergence traders remember: indices ripping, but a major bank getting hit hard. It kept the session from being a clean everything is fine breath story. ExxonMobil slipped a little over 2% as energy was sold, crude eased, and the war risk premium faded. Exxon matters because it's a liquidity anchor for that whole sector. So weakness in Exxon reinforced that this was a real rotation out of energy, not just one or two names acting weird. Oracle jumped almost 5%. The backdrop: AI and infrastructure-related announcements and deal headlines that reignited the AI buildout narrative. For today's story, Oracle's move mattered because it broadened the AI rally beyond just chips, pulling enterprise infrastructure and cloud spend into the leadership mix. Near-term setup: keep it simple. First, watch crude and Middle East headlines. Today's energy weakness says the market was depricing conflict risk fast. Second, bank earnings stay a key tape driver after Wells Fargo's downside outlier. And then the macro calendar. Next week, retail sales and core retail sales on Tuesday, April 21st. Unemployment claims and flash PMIs on Thursday, April 23rd. And revised University of Michigan consumer sentiment on Friday, April 24th. Into the next session, the tells are whether AI leaders like Nvidia and MU hold their gains, and whether Wells Fargo stabilizes while Exxon just tracks whatever oil does. So the wrap. This was a risk-on day, but led from the top. Megacaps and AI leaders pulled the indices higher. Energy acted like the funding source. Financials stayed a mixed bag, with Wells Fargo the big caution sign. Next session, It's all about follow-through. Does AI leadership keep control, and do the weak spots finally stop bleeding? Thank you for watching Cat Eye US Stock. Stay curious, stay calm, and we'll see you next time.